Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing an important update about the economies and the investment market so you can understand what we see on the global landscape. Generally speaking, we're seeing very light volatility throughout this year. In fact, if I look at most of the indices, and I've talked about this repeatedly, that you're seeing basically a fairly flat, generally speaking, stock market year. We've seen 2% uprises followed by 2% downs and back and forth. So it's kind of this back and fill. We call this consolidation. This is a natural process of the markets. When you have 3 or 4 really good years on the upside, sometimes you'll have a year where it's basically just flat and the markets don't really do a lot. Now, while you hear a lot of hoopla about China's devaluing their yuan, or you hear about Greece or the ISIS situation, bottom line, folks, is this. Don't get nervous. This is news. It's sensationalized in order to make you make bad emotional decisions. I can tell you every week on my TV and radio show, I literally get dozens and dozens and dozens of phone calls from people who are emotional investors, who listen to the news media and they hear the market drop 1% today, it's up 1% the next day, it's down 1.5% the next day, it's up 1.5%. These are natural. By the way, it's not just the stock market. We've seen the bond market negative year to date. Remember government treasuries, the safest investment in the world? Well, they're actually negative year to date, while the equity markets are either flat or slightly up. Bottom line, everything goes up and down. Don't worry about short-term valuations or short-term concerns. We're looking at the longer-term trend of the growth of the U.S. economy and the world. We're looking at recessionary indicators, which currently we see none in our overall research of all of our sources. We're looking possibly for a decent end of 2015. But again, it's back and fill. We're seeing this consolidation. This is normal. I hope that all of our clients realize that. Of course, our longer term clients have seen back and fills before, only to be exceeded by typically new highs in various asset categories. We look at a good, strong U.S. economy. We look at a generally strong overall global economy. There are always going to be weak spots. There's going to be a lot of news hoopla. And remember, 24/7 cable news today, we didn't have that 30 years ago. You hear about the same things repeatedly throughout the day 100 times, so people think things are different or they're worse. Things are good. They're slowly getting better. I firmly believe interest rates will be moved up in September, followed by additional increases as we get into 2016. Slow and methodical our Fed will be, but ultimately long-term bonds and intermediate-term bond funds will get hurt. So if you do own a lot of bonds, of course, our clients don't, but if you're not a client, make sure you adjust your portfolio accordingly. If you're a client of our firm, you have any questions, call me. If you're nervous, give us a call. Let's talk on the phone. If you're not a client, maybe it's time you became a client. Get Real Money Management, which includes risk management. Make sure you have yourself a safe and profitable day, and make sure you listen to my TV show on Sunday and my radio show on Sunday morning in addition. Have a great and profitable day.